Thanks for staying with us on SABC News. Chinese stocks closed lower on Wednesday due to bumpy economic recovery after the country dropped its strict zero-COVID policy and as uneven first-quarter macro data weighed on sentiment. Now, China reported higher-than-expected first-quarter growth on Tuesday, but some data pointed towards that uneven recovery and uneven recovery trends as well. The data also showed factory output growth was just below expectations, while retail sales growth hit nearly two-year highs. Goldman Sachs said in a note that they were cautioning that some strengths, such as pent-up demand and catch-up production post the COVID exit wave, may fade sequentially in the coming months. Some investors continue to bet on AI stocks. Frenzy around Chinese equivalents of OpenAI's ChatGPT chatbot boosted shares of companies in the tech, media and telecom sector. So the Shanghai Composite Index finished 0.7% lower and the Hang Seng Index was down 1.4%. Let's go to the United States and take a look at what's happening on Wall Street. The S&P 500 ended little changed on Tuesday after a mixed performance from mega-cap stocks and disappointing quarterly results from Johnson & Johnson as well as Goldman Sachs. The S&P 500 gained 0.086%. The Nasdaq Composite lost 0.04% and the Dow Jones Industrial Average down 0.03%. Let's come closer to home. The JSE is trading a little bit lower today. The all-share index declining by 1.2% at 78,387. The industrial 25 index is 0.2% down. Financials have shed 2.5%. When we go to Europe, their shares are also trading weaker. Britain FTSE 100 shed 1/3%. The CAC 40 in France as well as Germany's DAX are slightly down. When we're looking at commodities, gold is trading at $1,973 an ounce, platinum at $1,079 per ounce, and a barrel of Brent crude oil at $83.22. The rand trading at 18 rand 29 to the dollar, 22 rand 73 to the pound sterling, and 20 rand and 1 cent to the euro. Let's find out what this means and get some analysis. Carmen Belwane, an investment analyst at Sanlam Investments, joins me now. Carmen, a very good afternoon to you. It's earnings season in the United States. Banks, for the most part, reporting good numbers and maybe easing those concerns that were growing about that sector.
Yeah, it does seem to be surprising on the upside as it's come out so far. So we've seen some of the big banks come out with their numbers. And as much as it does look positive compared to expectations, we are seeing a build-up in provisions by the bank, number one, and more importantly, an increase in the bad debts as well. I think, we're still early days in terms of into the US earnings season, but we'll next see the regional banks come out in the next few days and weeks, and that'll firm up the sort of view of whether or not this season is as bad or as weak as we were expecting, or whether they're going to surprise to the upside.
Okay. And then when we're staying in America, we saw their currency dipping a little bit earlier on, and it's steadied today, though. What's going on?
So we did see the Fed comments come out, two of the Fed presidents come out with comments yesterday, and that's sort of given a boost in terms of continued expectation that there will be continued rate hikes as has come out of those comments, and that's given some support to the dollar. Adding on to that, we've also seen the UK CPI print come out this morning, and that surprised marginally up versus what consensus was expecting. So that again hasn't had an impact on the dollar as well.
Carmen, when we go to Asia, there was so much optimism around China's economy reopening. People were making it seem like it's a second coming. Now that optimism seems to be tempered, including that Goldman Sachs note that I referred to earlier on, people warning that the recovery may not be as big as was initially expected.
No, that is true. The expectation initially at the beginning of this year was that once China did open up again, we'd see a boost in terms of demand, which would support commodities, number one. As you mentioned earlier, we did see a very, very strong print on the retail numbers out of China earlier in the week, as well as the stable GDP numbers. Having said that, I think one issue that we haven't actually touched on and we haven't seen much rhetoric on, maybe that's what's going to weigh into China's recovery going forward, is the political risk. We know the significant impact that we've seen there of in the last few months. So definitely something to watch out for. And as mentioned, it might be the euphoria of the economy reopening, but moving forward, there is concern that will taper off.
All right, let's go to the United Kingdom. The FTSE 100 slipping a little bit today. There are expectations that there's going to be another rate hike there from the Bank of England. What else is moving the markets there?
I think the overriding theme today is definitely that UK CPI printed 10.1%. Market was looking for 9.8%. So it seems that what the BOE has done so far has not actually tempered inflation. And the read-through there is that they're likely to see, as you've mentioned, an increase in the interest rates going forward, keeping in mind that the UK interest rate at present is negative on a real level, so at about 4.25%. And the concern is that not enough is being done to temper inflation going forward, and that's what we're seeing coming through in that number. And so that's the overriding theme for today.
All right, staying with inflation figures in South Africa, ours out today. CPI up 7.1% in March from 7% in February and 6.9% in January. Just your reaction to that?
So obviously disappointing. It means that we are likely to see, as it is expected, another rate hike proposed at 25 bips, as the market is looking for at the moment. If you do look at the numbers, though, and you strip out food and fuel and get to core inflation, we did see that that was flatlined, so stayed at a steady 5.2%. So what that means is that and not unexpected, that the significant part of the inflation increase is coming from food as well as increased fuel prices.
Carmen, when we're looking at company news in South Africa, it seems like it's a bit thin, not finding much. Yesterday, one of the big stories is Capitec results out and that impairment that their CEO says people are making too much of a fuss about. Also, Tongaat Hewlett censure by the JSE yesterday. Is there anything else interesting that you're watching that's happened or that's still to come locally?
Yeah, so it's, as you've mentioned, it's been thin for a few weeks. I don't know if everyone's sort of taken off with all the public holidays in April. Having said that, we are looking for that US initial jobless claims number that's coming out later in the week, which will give us a guide once again into what the next move for the Fed's likely to be, and then also the SA PPI numbers as well to give an indication of what we're seeing locally.
All right, Carmen Benwane, an investment analyst at Sanlam Investments, joining me there to take a look at what's moving the markets. Thanks so much for your time this afternoon, Carmen. Really appreciate it. It's time for a short break. When we come back, we're going to continue looking at that inflation number, what it means for us living in South Africa. Tlanti Pai from PwC will be joining us. Do stay with us on the SABC News.